Hello, everyone. Hi, Alexander, Hugo, Sinatra, Ryan.
Hi,
How
Dale.
are you? How are you today, buddy?
All good, you?
Good. I was noticing U.S. dollar yen really getting hit to the downside. Pretty ugly. So, this is part of the rate scene, and yields are down again.
Yeah.
The only part of the correlation that's not working with the weaker yen is gold is lower, but put in a pretty good day yesterday. Euro coming back, cable coming back. Dollar looks heavy to me with the yen leading the way down. You see the face screen only? Okay, there you go. Hi. There you go. Hi, Michael Schneider, Raj. Okay, so I was showing the yen at first, guys. Finally resolving after moving sideways for weeks under this 110.50. I think it's going to at least challenge this and maybe take it out. I don't think we're going to get the yen crash to 102, but looking at yields, same scenario. Holding up okay. So I think this is going to be, some of the people I follow, not all my thoughts are original. How about yours, Ryan? You talk to a lot of people and whose work you respect, and sometimes they give you ideas that you have biases on, like maybe a few at ForexAnalytix.
Yeah, definitely. A lot of good views in the room there. Some and some crazy ones, but
be a good shill now, man. Be a good shill. All right. Anyway, so
it's that Stellios you got to watch out for.
Yeah, look out for Sappy.
I'm okay.
Crap, he's here. I didn't know he was on yet.
Oh, shoot. Yeah, you
By the way,
talk.
we hear you loud and clear, Ryan. Whatever you've done, it's working.
He got out of his, his dry suit, his sea hunt suit. You guys are too young to remember sea hunt with Lloyd Bridges, but
far too young.
Anyway,
far too young.
What do you guys think? I mean, this is a pretty important breakout of a range that we've had for almost a month. Between what's behind it?
It's ranges within ranges, isn't it? You can see back in August we got that down to the lows 109s. It almost looks the same pattern when we collapse on 111, get down to 109. Then what happens? We bounce again up to 110, back to 109, or maybe go a bit higher to 110.50. I really can't see anything more than sideways action going on here. Especially with the Fed next week.
Maybe all we do is we clean out all the longs down here, guys, and if we had something like this from here, it would take these lows out by 60, 70 pips, take it down to 107.80, 107.5 is kind of a range I'm looking at for the yen. And does that tie in with I really don't think that yields, the 10-year at this point right now is headed to new lows. So I don't know where it's going. Is it going to 90, the 10-year here, or what? When I look at this, it was a pretty weak bounce. So
again, I think we're waiting on the Fed, aren't we? We're waiting on the Fed again, aren't we? Yields are looking a bit soft. They took they've taken a bit of a bang after the CPI report yesterday, which showed softer CPI, but it's still running at 5 point whatever.
CPI, NFP, so some weak data. I don't think this was 50% back of this. So maybe maybe you have to be open to the possibility that we went from whatever this was, 177 to 113. Call it 60. From here at 138, gosh, that would take you back down to 78.
Yeah, but I can't see that happening. I think we're
Well,
just gyrating with the data.
It only takes a collapse of some big, I don't know, something like Evergrande in China, and you'll see yields going back there, right? It is.
Yeah, well,
if we do get some kind of black swan event, you can bet that yields are going to be going lower.
Well, with yields going lower, the S&P has followed through from last week's 2-week reversal, and every rally's getting hit. I did it up here. I think I did it at 12 on the off number as well. And here we are, probably breaking down out of this. Well, it depends how thick your pencil is, right?
Yeah.
You could have a thick line.
I think Blake's going to talk about that wedge which is being broken on the S&P.
Yeah, I know. Because he's been, showing it every day. So we're probably eating into the ink of that line or closing beneath it, but it looks vulnerable if we start taking this out. I mean, 4,100 doesn't look out of the question to me.
I shorted it on was it Friday or Monday? I had a little short that I put in a room just on as it looking to break sort of that 60 support that it was sitting on. I sold it, I think 58, 59. And it nudged down to 49, 48, and then I took some pips and I got stopped out on the bounce for pretty much break even. But I've been fancying it low. It's just like you say, it's lower lows, and it's just not looking as bullish as it was. But it doesn't give up without a fight. This thing, does it?
No, but I talked about the Dow breaking down last week, and I know it's only 30 stocks, but now. The strength is still NASDAQ, but look at this, guys. I asked everyone I interviewed, I must ask 30, 40 people, after a move like this in the Russell, right? Is this just consolidation or is it distribution? And look at how many attempts to make new highs while the market was surging. And I think next time down at 208, there's problems. I don't think it would take much for the Russell to retest the pre-COVID highs up here at 170. But this is pretty poor performance considering this, right? Or the S&Ps, or even the Dow. And again, Apple had its big dog and pony show, and I know it's trying to hold here, but to me it looks like the wedge. We went from 3 days to the top of the wedge to a false breakout and challenging the wedge line and actually closing underneath it. So to me that speaks of vulnerability. Why can't Apple see this? There's a worm in the apple, in my view. Don't eat it. Eve, don't take that. Oh, I'll know that you're naked. Okay, go ahead. Take a bite of that apple. That's my biblical. It is today. It is the day before Rosh Hashanah. So, yeah. Okay. Anyway, so big boys are getting out of what, Forex gal? They're getting out of everything. The market. Okay. Well, let's bring Blake in, and if he's available. Are you available?
Yeah, I'm here. Okay. How's it going?
Good, buddy. So,
hey,
go ahead.
No, you got, Stellios, you were talking a little bit about Evergrande. I was wondering maybe that's the reason why we saw this yen. The dollar yen really broke overnight, and that was it was a range that we've been here. Let me just kind of.
Yeah, is it like a Lehman Brothers event? They're not that big, are they?
They are. I was reading today; they're bigger than Lehman Bear combined. So,
oh my goodness!
Yeah, and they're gonna miss payments basically. So this is a technical default. So it's not to be.
And what are they?
They're developers.
Yeah,
they were apparently China's second biggest developer.
Again. Yeah. Okay.
Which I mean, you think about like all of. I mean, that's a pretty big deal, right?
Yeah, China is going a different route of letting things fail. it's interesting. We'll see if anything happens in their financial sector because of this. You know.
Well, you know, so first of all, I think Ryan, you know, he was in the chat room earlier this morning, and good morning, Ryan. He had mentioned, he'd mentioned in the chat room that that you know China will probably end up containing it, which that's probably realistic to believe. You know, and keep it, you know, really just confined to China, but. I mean, when you see like you know the dollar yen start to break, like you see it here, I think that is you know a risk, and you see the dollar Swiss is starting to you know test some support. Swiss and yen, if there's any other currency that starts showing more you know bullishness other than dollar, you know you start seeing it come up you know against the yen and the Swiss franc. Then you start really, you know, taking a look around and saying, is it possible that we can see some you know, bigger moves lower? And we could talk about the S&P. I mean, the S&P is obviously sitting on wedge support, and what you should be looking at right now is this 44.25 level in the S&P. That's a big support. It's a 618 retracement. So this fib, if you will. Right here, if that gives way, then we know that we're, you know, breaking through that that wedge support, and we're probably going to see a much deeper correction. And you know, I had a gentleman by the name of Oscar. He wanted me to pull up a chart today, and I don't normally look at it, but I pulled it up. And this is the Dow, but the composite. So, you know, and I usually, you know, we, like most people, we look at the Dow Industrial Average. I don't really look at the composite because I'm always.
I remember there was a futures contract on that for years. We used to call it the knife.
Oh, the knife, huh?
Yeah.
Because you'd try to no,
I think it was like a symbol. Knife? It was a symbol. And why, you know, so
got it.
Yeah.
Oh, well, you know, right now we have a little bit of a wedge breakdown, and you see, like I said, it's obviously very apparent right now in the S&P, and that's why, and the lack of ability for the market to bounce yesterday is concerning. Then you have yen strength, then you see Swiss strength, and you actually have dollar strength, and dollar strength not in the good places. So when I say dollar strength not in the good places, well, you got, you know, the Aussie, which is holding below. It was a wedge. Now it's holding below previous supports, acting as current resistance, channel resistance. That's holding. So again, you got dollar strength probably where you don't want to see it. You know, you got the Kiwi, which is, you know, starting to underperform. I was actually quite impressed with the Kiwi performance over the course of the last, you know, couple of weeks or last week or so, because the retracement's very shallow, but now we're starting to approach some pretty, you know, important levels of support. You see the dollar peaking up against the Canadian. You know, again, these are places that you don't want to see the dollar strengthen. And then, as I, you know, alluded to in my tweet to you guys this morning, is you start seeing, you know, the dollar percolate against the peso, which, you know, the dollar Mexican peso has not gone down. And anybody who let me do it a different way. This is probably one of the more important charts that you should pay attention to. This is a daily chart of the US dollar Mexican peso. Let's just kind of zoom out a little bit there and then match it up against the, you know, S&P. So the S&P is in blue. Now you start to see the S&P roll over, which you guys know the wedge. I just, you know, had it up there for you. That really starts to break down. What do you think is going to happen here? I mean, you have the dollar Mexican peso that looks like yay. I mean, this thing's going to rip, you know, back above 22 on any type of small correction. So you got to start watching the dollar Mexican peso. Let me go ahead and you know what? Here's another one.
You said once, Blake, you think Euromex is even more of a risk-off play. It has higher beta.
Yeah, and it probably is more dependent on you know
Euro?
the euro. Yeah, I mean the Mexican peso is a good risk off. You know, just currency to be watching.
This is even a stronger chart, isn't it? I mean, look at it's just a triangle after a big move to the upside.
Yeah, this is one of those descending wedges that should break higher, and so you know you see.
I remember what you say. I've learned a lot from you over 4 years. So you know that's why I'm saying that everyone who's listening, and I thought I knew a lot. Okay, so being in the chat room with Blake and all these other guys, you're going to learn. So you know you're either going to pay the market or you're going to pay to learn and hang out with people that want to help you. So fortunately, I'm an employee of the company, and I got to be here for all these webinars over the last 4 years, and I'm telling you that I have improved markedly from being around this team. So those of you that remember me from FX Street, you could tell that a lot of the things I see the markets better now. So
I appreciate that, Dale.
Why don't you guys try it?
Well,
I mean, if it worked for an old man like me, it'll work for some of you young bucks out there. They're just starting your career. Invest in your career.
You know,
go ahead, buddy.
The thing is, I'm not. I always try to explain to people, and I think you know we do here is I don't know everything, and I definitely don't pretend to know everything. But having a community is probably the most important thing. So if I'm in the markets, and you're in these here, this is our chat room from this morning, just to give you this is Paulie just jumped in there. You can see I'm post all these charts. As soon as I get up in the morning, I start posting charts on what I'm seeing overnight. It's just and it's just this is I have been awake for maybe like 2 hours, so you can see this is all from this morning, all these different charts, and we're all updating charts and talking about things. And it's being in a community like this where you kind of pick up ideas, or you see other people saying, oh, you know what, I wasn't even looking at that, and bringing that to your attention might make the difference between you making a good trade or maybe not stepping into a trade that you shouldn't have been in the first place. And that's the most important thing, in my opinion. And are you going to pick up
collaboration?
The collaboration
Jay
part
says,
of it's huge.
Blake loads my bias gun. So that's a great one. So you get ideas here in F.A.C E, but you know what you don't get? You don't get the trigger and seeing when. And the trade is a lot of it's about when, right? Not if, but when. It's a timing. So
that's everything.
You don't get that in here. You may get your bias unloaded, but you still might need help on how to pull the trigger, how to manage a risk, and how to let a trade work for you without getting out the first time you're up 15 pips.
And that's the thing is, and timing, is something that you'll work on for your entire career while you trade. And I'll tell you, you could take these people that are like, stock market's going to go down. Risk off. And then they just get short, and they're like, oh, I was eventually right. It's like, well, you were also, 2 weeks early. So, that makes you wrong.
Look at that. I just got on TradeView Amanda covering some US dollar yen shorts. So there's another example. How many of you came in short yen this morning? Okay.
Yeah, I'm sure a lot of people actually probably cover or
were
traded
long
here
and got stopped out. So
Or, trade the dollar yen short. And by the way, we are nearing that 161% extension. This is a range extension or double top, however you want to look at it. We should eventually get to 108.75, but we're not going to get there in one straight shot either. You know what I mean? So,
I'm watching this current move because I fancy a long into 109 just for a pure scalp of the range.
Yeah, I mean, hey, if you look at it and you're like, well, I wouldn't mind being long down here. I think somewhere down, after you complete this range, I think down here would be a viable place to be on the long side. I don't know if I'd want to be it depends on the situation too. If we're sliding down towards 108.75 and then, what's the name of that Chinese company? Evergrande. Let's say they're actually actively defaulting on some of their loans. I might actually think twice about that. It's like
Isn't it funny how we have Evergrande, then we had Evergreen in Suez Canal? They all sound the same, right?
Yeah, Evergiven.
Evergiven, not Evergreen. Yeah, Evergiven. There you go.
But it was the Evergreen company. So you're right on that anyway.
But anyway, I think we should keep, and going back to like the Evergrande situation, I think we should keep it on the radar. I don't know if we need to be, completely worried about, but what I will say is technically I am worried about the what you're seeing in equities and some of the breadth that you're seeing underneath, and technology really underperformed yesterday. And I think you got to watch this NASDAQ too. NASDAQ 100 starts getting a little weaker. I think that's going to weigh on the markets, but let's not ignore the fact that we are really critical support here in the S&P. And I mean, if you want to be long risk, today's the day to do it. I'm just going to put that out there. Like if you're like, oh, I believe we're going to shake this off and stocks are going higher and, we're going to rally into the Fed going into this next week. If you are in that camp, then this is your place to go long. This is it. From a risk reward standpoint, I'm not going to tell you if that's the right trade or if I feel that's the right trade. But if you believe in this chart and you believe that we are going higher, then this is the day you buy, or yesterday, right here at these prices at 44.50. If you're like, well, I don't care about the divergent relative strength, and I don't care that we've been, the stock market has actually doubled since, the post-COVID lows, which let me see, have we doubled?
Yeah.
Yeah, we did. So, anyway, so Stellios and Ryan and Dale, what else do we have going on today? I mean, that's, I forgot. I got so carried away talking. Dale and I were getting excited talking about something. I wanted to bring up the South African Rand. And one of the things that I'm looking at right now is this particular chart. We actually hit the 618 retracement, did a little false breakdown. Now we're developing this little inverted head and shoulder pattern. In time, we still have some time to build out this pattern if it really wants to build some symmetry. Doesn't mean it has to happen. But what I am looking for, and what I've been looking for since yesterday, if you guys were on our, daily roundup, which is our ForexAnalytix community exclusive webinar. So is our Morning Edge, which is in less than an hour from now. I was talking yesterday, hey, don't get excited about this until we break above 1440. And that is really, it held us overnight in Asia. And that's, where we're at right now. And one of the other things I threw out this morning for, people in the ForexAnalytix community, you got to look at this euro dollar. It actually doesn't look bearish at the moment. Yesterday's daily candle was or 2 days ago. No, it was yesterday. Yeah. It was a long lower shadow doji, which is basically they tend to act like hammers. So you got a bullish move yesterday, then you got a pin bar today. I think it's still trying to play off this possible inverted head and shoulder pattern. So before you guys get all bearish the euro or bullish the dollar, just keep in mind some of these things that are are percolating. So, hey, Ryan, Stellios, what else happened in Europe overnight? I know we're all watching this.
We have to mention
Evercore.
Yes, we have to mention Evercore. We have to mention. Speaking about China, we had some pretty bad data out of China. Industrial production missed, retail sales missed by a big margin. So, the world's second biggest economy, or is it going to be the first biggest, the biggest one soon, is not firing on all cylinders. And while that is happening, we're seeing increases in commodity prices. I was reading that, what was it? Natural gas wholesale prices in the UK are up something like 20% this week. And so, Ryan, if you're heating your place with natural gas, then get ready for some high bills. But on the other hand, we got CPI of the UK, came
Very
in at
high.
3.2% year on year. We're expecting 2.9, up from 2%. So, and PPI also, PPI input, 11% year on year. Guess where that is going to go? It's not going to. Let me put it this way: inflation is not going lower. That's almost for sure. So we're in an environment where commodity prices are going up, inflation is going up, wages are going up. Everything, obviously, wages are not going up the same as inflation, but it's a situation where costs are going higher, and the global economy seems to be kind of topping out. So we had the nice recovery after COVID, but it doesn't look so rosy now. So this is a very delicate situation, and all it will take is some kind of like I said before, black swan event of big enough dimensions to destabilize everything.
Yeah,
look at what the. I was just going to say, look on my screen here, Ryan. Look at what the FTSE's done all year. I mean,
ever made new highs like U.S. markets? And
yeah, I mean, if you well, I'm like, if you guys live in Europe, you guys do live in Europe. Oh, I'm sorry, you only live in the UK. You don't live in Europe. Okay, so, but for those of you that live on the other side of the pond, I mean, do you guys have like stock market envy?
No, because it's if you want to look at the UK stocks,
envy.
you look at the FTSE 250. That's UK stocks. Remember, the FTSE 100 is pretty much made up of international companies. So it gets affected by the pound. If the pound drops, the FTSE drops, and or vice versa. So it's not really.
But it is one of the
index.
major bourses not making new highs. What hasn't made a new high besides FTSE?
What hasn't made a new high? No, you're quite right. But you need to look at the UK centric stocks, which is the 250. That's your main.
Yeah, the DAX is underperforming, but maybe that's more international type of companies too. You also
have to remember. Sorry, you have to remember also that the pound is performing pretty well in 2021, and usually the stock market cannot not cannot, but there's an inverse relationship, so that may be a reason as well. We have Canadian CPI in a minute.
We have Canadian data. If you guys want to, if you guys are ForexAnalytix subscribers, you go over to here to your calendar, open your data flash. This is something that we pay for, and we provide to all of our ForexAnalytix subscribers, so you can get the data as it comes out quickly. Let me move this back over to the chart and then grab this CPI data. Any expectations here? Only thing I have to say about Canadian, this is an hourly triangle that I'm carefully watching. So a break above 127 should be pretty bullish on a weak Canadian print. So just keep that in mind.
Yeah, Crown Royal's going up.
Crown Royal, damn it! This is my favorite Canadian whiskey by far. The amount of little Crown Royal bags I've acquired over the years is unbelievable.
And now you fill it with Krugerrands?
Yeah, I fill it with my kids' toys. Yeah, like any good father would. Just kidding.
By the way, oil is ripping again today. Just no stopping.
Yeah.
Natural gas is on fire as well.
Yeah, that put a damper on the U.S. dollar Norwegian kroner, which I thought was going to squeeze a little bit, but that strong crude, and there was also some trade balance numbers that came out of Norway overnight too that were a little stronger, so that helped too. So yeah, I've been keeping an eye on it because I'm wondering, if we're going to squeeze past 873 again in the US dollar Norway and get a little short squeeze there. But yeah, I think crude, the strength in crude is really helping. So
it's such a well-run country that I love Norway. Okay, let's go.
Here we go.
Oh, New York Fed is strong.
CPI strong out of Canada.
4.1% year on year. Yep, stronger than expected.
So here goes the dollar Canadian slipping a little bit.
What's that? Big Empire Manufacturing. That's the first manufacturing data of the new month in the US. That's a big beat. It's gone to 34.3 from 18 expected and 18.3 prior. So that's a massive beat.
S&P bouncing a little bit here. Dollar's a little weaker.
Inflation pretty hot as well. Yeah, look at that.
Yeah, I don't know. I'm looking at this
transitory.
It is
everywhere.
It's always transitory.
What I was going to add quickly on the UK inflation, the UK could be in some trouble with inflation because the majority of it is imported. So we could be on the verge of seeing inflation hitting same as US 5-6%. Some high numbers, and the Bank of England aren't going to be able to do anything about it.
The one thing I guess we have to point out yesterday too, the CPI data did come in, and it was really shaken off yesterday, right? I mean, you saw this weak CPI that came out of the US, and stocks ripped. Dollar fell, and then we got a complete reversal going into yesterday afternoon. So, we'll see. Like, you look at the dollar Canadian, you're like, oh, look, strong inflation data. The dollar Canadian just slumped, and then look at it right now. Here, let's pull up a 1 minute chart, and then I know Dale's got to take over. He's got to, but look, we sold off, and then here we go ripping back, like, not back to highs, but you can see it just kind of shaking off the data. So it's gonna be interesting. Anyway, I want to thank everybody for being here with me and with Stellios and Ryan. I don't know if we heard Steve. Steve's kind of been in and out because his son is going back to school. But anyway, he'll be joining us on the Morning Edge in about 45 minutes. But I want to thank you guys all for joining us. Dale's going to have a great interview with Darvis Box, I guess, is his guest today. So I want to thank everybody for being here. I'll see you guys tomorrow morning on the F.A.C.E webinar, and you guys have a great trading session.
You too, Blake.
Guys.
Thanks, guys.
Ryan, Stell.
See ya.
My trading warrior brothers. Have a great one. Okay, John, welcome back. Can you hear me?
Yes. Good morning. Can you hear me?
Got you, John, loud and clear. So what's happening in modified Darvis boxes? We doing any damage with what risk on it's done in the last week or so?
Yeah, well, it's good that Blake ended talking about the U.S. markets and especially that CPI number, because in my opinion, we're at kind of a crossroads. And this is a quick slide for your viewers who don't know me all that well. I'm an independent trader, and my strategy is based off of the book by Nicholas Darvis, How I Made $2 Million in the Stock Market. And basically, this is the crux of my strategy. I'm looking for patterns, basically range patterns, and then looking to buy or short the breakouts or the breakdowns. And in my view, there's only really 3 states of trend in the market. And right now, I think we're at a crossroads. I'm mildly bearish. I've got 3 longs and I've got 4 shorts. And I only started putting on the shorts last week. And what tells me we're at a crossroads is all 4 of the shorts are working. But also the 3 of the longs are working also.
The bifurcation.
And what's really interesting is how lately, these last few days, we've had that strong open, strong future, strong open, and then just fade into the second half of the day.
Yeah, so they're selling into the rips. Yeah.
And so I think we're kind of at a crossroads, but I can't tell which is going to win out, whether the bulls or the bears are going to win out. So
where's the box up here? Do you have any kind of box, or because it's not flat, you can't draw a modified Darvis box, say in the last, what is this, a daily chart?
yeah, so
Yeah,
so
the last
right
few
now,
weeks.
hopefully everybody can see my chart with the
Yeah,
black.
they do. Right.
And I've got the S&P 500 on, or here, let's put the SPYs on, same thing. And I've got this on a weekly view. And the first thing I'd draw people's attention to is the weekly moving average. If you see, it's been this long uptrend.
Acted like a trend line.
Yeah, and we haven't even had a piercing of that, barely, only once back in March, and then an actual close below that back in October, almost a year ago. So heck of a trend. But if we zoom in on the weeks here from the latest box breakout, as I like to frame it, it's been 12 weeks. If you count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks of uptrend. That's historically about how much you're going to get before volatility comes in, because 12 weeks is a strong trend. Now, if we look at the daily, you can see here's where the box, which I framed, and the box is just a framing tool to try and identify what's going sideways versus what's in an uptrend. And you can see starting last week, down, and the trend has shifted. And we've gotten some red volume. And you can see that in the same on the NASDAQ, except the NASDAQ's a little different. This one had a different box shape to it with the breakout, and then a much smaller one with a breakout. And but again, that market shifted also. This yellow
Would you
circle,
consider, when you look at that NASDAQ chart, so we could have a conversation instead of a lecture, can you go back to that last chart?
Oh, certainly.
Okay, so say we close under the last rectangle box you have there, back like under 14.8. Is that a negated signal?
Yeah, in fact, the red line is where I consider it to be a completely negated signal.
Okay, like around 14.8, and that's a composite, not the 100. Okay.
Yeah, and
got it.
And
have you found that sometimes your failed signals are your best ones because you have everyone wrong-footed on the breakout that doesn't work?
well, I tell you, yeah, I'm always on the lookout for that. And on the NASDAQ weekly, or even on the daily, this yellow circle,
Yeah.
I thought the box was going to break down, and that was it.
Yeah.
And so the way I play it,
So did
is I short a little bit in that, but because I have a defined parameter, a defined situation, I can put on a short trade, but then with a tight stop. It either works or I'm out.
Right. Okay. So what do you see in here? What do you do in this environment where we're still above all your buy signals? You're seeing, oh, well, you told us you have some shorts. Are the shorts that you have on, were they generated from breaking down out of a distribution, like a Jarvis box at the top?
Yes, that's correct. One which I'm short is DocuSign.
Okay, yeah, I could see why.
Let's put it, this is the weekly view.
Yeah.
And you can see the latest setup. The green arrow here is their earnings. Now, what went crazy with Docu is it actually was breaking out a couple of weeks ago on this green volume.
Right.
And then whoosh.
No follow through. Yeah.
Yeah. And then at some point, the next day of the quote breakout, the market decided, whoa, maybe we've made a mistake.
Yeah. Okay, great example.
And the red arrow, the red circle is where I went short on it.
Mm-hmm.
And knock on wood, so far it's been working quite well. Another one which I put on actually yesterday is Roku.
Okay, another darling.
Roku has a very large box range. Clearly at the blue circle, everybody's excited about it. It's breaking out, great. But then everything changed. Now, I would have had no reason to be betting against it unless I hated Roku up at the 470 level. But since I'm patient and I pay attention, you see it just completely break down and go to the opposite side. And now that's where my alarm bells start ringing. And I initiated shorts the last 2 days. And knock on wood, so far it's working. But with these larger ones, it may not work.
Okay.
Another one is TTD.
Can
It
you
had
get
earnings.
so you get head and shoulders formations with different types of boxes, huh?
Yeah,
Almost looks like one there.
yeah. When I view out on the time frame, that doesn't look so healthy. And then when I can zoom in and see what's going on, we see the earnings, which was recently, actually the arrow's a little off, but earnings and then a complete change in character. Moving averages pointing down. It did form a box structure and then it broke it on the red volume day. So I am shorted.
Okay. Do you have anything on Apple? Just curious
So
if it broke any
Apple,
boxes.
Apple is currently sort of mirroring the trend in the indexes, long, steady uptrend. No new box formations. But again, I pick up on volume, a big volume bar, and I'll use these little violet arrows just to grab, point my eyes to something.
Okay.
So Apple kind of reflects, the general market at this point, in my opinion.
Okay. Thank you.
What's interesting on the longs I've got NVIDIA.
Yeah.
And you can see the trend in NVIDIA, and it's got a great uptrend. Nothing wrong with this. I've been long NVIDIA since back here at 159.
Great patience. Let me ask you something. Are the boxes your discipline for staying with the trade? Because there you're talking about you've been long since the summer in NVIDIA, and summer's almost over. What kind of self-talk, or is it just stay with my signal? It hasn't changed. Do you say to yourself so that you could hold a position for that period of time, which for some people would be short term? For me, it's a lifetime. So do you have to do you have any self-talk, or it's just automatic pilot and you trail stops and you don't have to think about it?
Well, it's a combination. Because I'm an independent trader, I've got more of a short-term mentality. So I'm always asking myself, is this stock acting right? And I think where people could disagree is what defines a stock acting right. And I think it's a combination of the moving averages. Like on this, I'll use the weekly moving average as an ultimate trend stop. But many times I just want to ride the trend, and you can use shorter moving averages for that, to do that. And maybe a trader would come in and out on it, but it's really how the Darvas box system works. It's like a staircase.
Yeah.
You buy a breakout, it moves up, it forms another staircase, You hope it breaks, it holds itself together,
Right.
and then builds for another step.
Okay. Can I get you to break NVIDIA for me? I'm short some NASDAQ 100s. Anyway, I was wondering if you could do me a favor.
Which one?
NVIDIA. Maybe take it back down underneath the green box. Have I ever taught you? Yeah, I bring a lot of people in, John, and I rarely do this, but has anyone ever taught you the cursor technique?
For what?
For trading. So what you do is you put your cursor on the candle, and whichever direction you want the market to go, you just drag it down. If you want it to go down, you put a magnet on it and you drag it down. You ever try that?
Oh, no.
I'm just kidding around with you, John. I've been, the cursor, you hope it's like, you have magnets and you could control the price action. Anyway, all right, NVIDIA, yeah, sideways. Does it bother you when the market, well, you make your bread and butter off things that go sideways. So you must have the patience of Job to be able to wait out these formations and just sit and wait. Especially depending upon the time frame. Are most of your signals off dailies? Or do you
most of the
drill
signals
down?
are dailies and weeklies because
Okay, yeah. You never even drill down to a 4-hour chart or anything like that.
yeah, you know what? I find intraday, I will drill down to that, but only if I'm buying, only if I think I got something that's ready to go.
Yeah.
Otherwise, but the confidence I take from this is that these formations show up again and again and again. And I can point to you example after example of box formation, breakout, or box formation and breakdown.
Okay. So, what's interesting to me is that if you have that belief, I'm sure you miss some trades. Do you miss them? You ever have like a clean box and maybe your head's turned for a day and you miss it? Do you miss trades like everyone else?
Yes, because you can't be everywhere.
That's right.
So I've got usually my focus list. I track about 100, maybe 120. Beyond that, my brain begins to melt.
You're way ahead of me. Mine melt with 10, 15. So isn't it comforting? And I don't care what the methodology is. Once you finally get it, you'll never have FOMO again. That to be accepting that I'm going to miss trades every day, and it's okay because there's always another bus around the corner.
Precisely. And things can get a little nuts on this. I want to show you Crocs, CROX.
Wow.
Believe it or not.
Those are the plastic shoe company, right?
Yeah, that's correct. So here's the weekly view. Yeah. It's just been amazing.
Yeah.
But now, because it's been trending for so long,
yeah,
I thought it was actually ripe for a breakdown. So I actually shorted it like right about here, right in here. And then yesterday it completely reversed and broke out. I'm no dummy. And like I said, I've got tight stops on it.
Yeah.
So I was short about 138, covered about 139 and change. It started ripping intraday and blasted out on a big green volume bar. So
did you reverse?
Yes, I did. Completely.
That's a pro move. Okay. All right. That's a pro move because most people would still be, I don't know, going through the grieving process of being wrong for trying to short the market. And the next day it's in your face. Yeah. So that's a pro move to reverse. Okay. Well, just want to let you know.
And that's the benefit actually of a box structure, in my opinion. you know that at either edge, potentially something may happen, you know?
Yeah. Yeah. Okay. Well, I forgot from last time, John. Do you teach this method? Do you trade for people? What's your business model if people want to, learn how you do what you do?
Well, right now, I'm just an independent guy. I developed this system.
Are you married?
What's that?
Are you married?
No, I'm not.
Okay, well then you're telling the truth. You're independent.
Yeah, well, I developed this because I originally started as an IBD CanSlim guy, and
Oh, okay, yeah,
it just wasn't quite working. And I realized I needed my own thing. And back when I developed this, I was working in my corporate job,
yeah.
and I was traveling all over the United States. And so, like Darvis himself in the book, he was able to figure out a system to trade while traveling around the world. And so I saw that as a very high similarity, and I decided to try and make a strategy out of it. Something I could do while away from phones and smartphones and all that, or computers. And over the years, I've really sort of honed this into my thing. I do not have a service or anything right now, but I am on Twitter. I may do a service because a lot of people have expressed interest.
Yeah, you could be managing money too.
Well, yeah, I've been approached for that as well.
Yeah.
But taking the leap for that, I'm not sure I'm ready for that yet. But
Okay, so why are you going public? Why? I mean, you're public. You're on Twitter. We're talking right now. You must have some type of goal in mind, or is it just because you like to share your work?
well,
Or you need attention? Is that
it's
it?
it's a combination of all that.
All right.
The Twitter is a form of online journaling.
Okay, true.
And remember, when you launch a strategy, which nobody else is doing, you're not even sure it's going to work. And so I got in started on Twitter, just sort of online journaling, and also when you put it out there, you're really holding yourself to accountable to a higher standard because you're making it public.
Uh-huh.
And gradually, as I got better at this, I started tweeting more. And now I'm just in the habit of sharing. I'm a sharing type of guy. And so I'm willing to put it out there. I don't give away all the secrets because there are a few secret sauce things I do not share.
Well, why not? Go all the way.
Proprietary edge.
Okay. There's that word, Mr. Proprietor. All right. Well, I think you've shown us a lot here today, John, and people can follow you at Modified Darvis Box. Or did you change your Twitter handle?
Yeah, I changed it to Darvis Trading because that's just easier. But I tell you, it's interesting because these happen all over the market. But the real question is, well, which signals do you want to take and which signals do you want to ignore? And that's really what I spend a lot of time doing. Once I put the trades on, then the trades become more autopilot.
Right.
You put the trade on, you put your stop on, and then you see what happens.
Right. And you're screening. You have to do a lot of screening to find trades. So, okay. Well, congratulations on the ones that are working. I think last time you were here, you had 0 shorts.
Yeah, that's correct, because we've been in a bull market for so long.
Right.
I refer to it as the endless up market because all this Fed money, it's got to go somewhere.
So is there a message to you that you're getting more of these sells? Have you seen this in a while? It's probably been quite a while since you've seen your stuff start to give some downside breakdowns.
Oh, completely. I'm actually shocked that I have shorts on, and I'm even more shocked.
The Russell never made a new high, so this is the box of boxes for me. And you know what? I kept asking people, John, maybe you're the one maybe here's the answer. I would ask, classical technicians and Elliott people and, whatever, I interview people that have different methodologies. And the question is this consolidation, which I didn't think so, it's gone on too long, or is it distribution, which is what I thought, which will eventually lead to a downside breakdown that
Yeah,
carries.
I'm every day we don't go up more, I think is fuel for getting a bit more bearish every day. This IWM, if you notice the weekly moving average, is now starting to point down a little bit.
Yeah, look at that. Huh. All right.
There's other indexes like the ITB for new housing construction. Yeah, that's gotten weak all of a sudden.
Yeah. Okay.
All right. Let me show you one more thing. I know time is getting short, but what does a box failure look like?
Oh, that's nice. So these are biotechs. All right.
Yeah, the large cap biotechs.
Yeah.
This, it's moved up, but not the greatest trend, but it broke out up here. But now here's that failure mark. I draw an extension across from the top.
Yeah.
That right there is failure. So if you bought it, it tried to go up. Now it's failed.
So you would just be out of longs right now?
What's that?
You would just be out of longs, or would you reverse and get short?
You could get short,
but it's an out more than a sell.
Yeah, that's correct. It's more of a long that didn't work, but it doesn't necessarily mean you should go the other way.
Okay. All right. Some great looks today, John. Really appreciate you being here and showing us this stuff. And, you're part of what we do here, intelligence gathering. And, I think it's significant that you're getting some things rolling over here. So thank you thank you for your giving spirit and sharing your views with the F.A.C.E community today.
Oh, no problem. And hopefully we get a resolution to all this. I see the futures are green right now. And
yeah, they're going to pop them.
I tell you, either the longs I have are going to continue to work, or the shorts are going to work. But if either one of those sets doesn't work, I'll be out and looking for trades in the direction that is working.
Maybe they'll both work. If you get out of your longs on this pop and you don't get stopped out of your shorts, maybe they both could work. So there's Dale Pinkert. Very unusual for me to be, Mr. Optimism. But anyway, I really appreciate you being here, John. Good hunting. And, you already know now you're my trading warrior brother, right?
Yep. All right. Thank you so much.
All right. It's a lot to live up to. We'll talk again. We'll talk again. All right, John?
Sounds great.
All right, buddy. Good hunting to you and everyone who follows your stuff. Have a great fall trading season, and we'll talk down the road.
Thanks, you too.
Okay, everyone. That's John at Darvis Trading. You could find him, follow him. And, mainly does stocks, but some excellent work. Simple, right? Powerful. Simple, powerful. You could join the guys for the Morning Edge for a lot more power and FX and all the other instruments that we cover at ForexAnalytix. That's in 12 minutes. I hope you took to heart. Yeah, that's the book. Yeah, took to heart what I said. Surround yourself with traders better than you, and you're going to rise to their level. Okay? And I'll see everyone tomorrow. Don't just count your pips, count your blessings. I'll be here for Yom Kippur. I hope I don't get struck down with lightning, but I'll be here. Okay? Blessings to you, Sinatra. I'll see you guys. Love everyone. I'm filled with love today. Thank you, Monica. That made me smile. See you later.